who are, again, adversely affected by it.
Yeah, generally speaking, while we do load up on those milk sandwiches this time of year,
Milk sandwiches? What are you talking
yes,
about?
everybody for some reason every time a snowstorm hits buys milk and bread.
Yeah, yeah.
I don't know
yeah.
what they do with the milk and bread, but they buy 6 loaves of bread, 3
Soak-
gallons of milk, and they
soak
have
up the
milk
bread.
sandwiches, presumably. I'm not the first one to make this joke. The town of Needham Police Department constantly makes jokes about milk sandwiches because of the idiocy behavior of people going to the grocery store ahead of storms. But yeah, most of that activity, to your point, Mark, it's not as though because I couldn't go to the grocery store today, I'm never going to buy groceries to refill my fridge. It's just going to get delayed. Wages that would have gotten paid, maybe get paid in overtime later in the week. One area that you point to, when flights get canceled, sometimes they don't get made up, and sometimes that's permanently lost revenue for the airlines. One thing I'm certain of is whether you're an airline, a retailer, or any other business that is affected in some small way by a snowstorm, if you have bad earnings in Q1 when you go to report in April or May, you will almost certainly be blaming those bad earnings on the bad weather from the first quarter of this year. To your point, though, most of the impact economically from this stuff tends to be temporary and made up elsewhere in the
Yeah.
coming weeks and months.
Yeah, it's mostly a media thing, Mike, and including on this show. We need something to talk about. But
It is entertaining, and the Globe
yeah,
and
yeah.
Channel 5 and everybody
Yeah,
else.
but what about 2 massive storms in one winter, though? That's got to have some sort of economic impact, right? No?
I think you'll be able to detect the hit to GDP, but to Mark's point, you're probably going to make it up in other quarters, right?
Well, you're almost certainly going to make it. I mean, there's the serious analyst. I'm not saying we're not serious here because we are, particularly in our day jobs. But the serious analyst is concerned about the long-term trend, whether you're trying to estimate the fair value of a company or trying to estimate GDP a year from now. And something like this, I mean, like you said, Mike, it could leave if it's deep, if it's significant destruction like a hurricane, it can leave scars.
Sure.
But for the most part, something like this would not affect the longer term trends. So in 10 years, no one will look back and say, oh boy, if we didn't have that blizzard, I'd be so much better off today.
Correct. Yeah. Town budgets, city budgets are also going to be affected by this. Most of them have already blown through their snow removal budgets for the year, and so some of those will be in the red. So, there are impacts here, but for the most part, if your flight got canceled on Monday because of the snowstorm, you'll probably fly out Tuesday. The airline will still capture that revenue. If you were going to go shopping today for a bunch of groceries or clothing items, then you're probably going to do so later. And if you're a teacher who's at home because of the snowstorm because the school is canceled, you'll be staying later in the year in June in order to make up the day. So by and large, yeah, while we could see a hit to GDP in the first quarter and a hit to certain corporate earnings in the first quarter, most of the time it's going to be made up elsewhere. So
Yeah.
not to say this doesn't suck, and hundreds of thousands of people without power, likely to be a whole lot more as the day moves on here with the winds and very heavy snow. So stay safe out there. Thanks for listening to our program as you are stuck at home without a whole lot else to do, and don't drive. I did it myself this morning. Like I said, I had like a 3-mile drive to do, and I felt guilty being out there because all the snowplow drivers were looking at me like, what kind of moron is driving his car in this right now? And just
That would be me.
don't do it. That was me. I am the person that everyone should be yelling at for causing confusion and making snowplow drivers slow down and do all that.
And don't be like Mike, you mentioned earlier, but seriously, don't be a shovel hero today. It's heavy stuff out there. The cold in the heart don't go real. It's not good. If you're shoveling, your heart's beating. It's not good because I've already heard of some circumstances where people have dropped dead shoveling this winter.
Oh yeah.
So be careful.
Those hardy New Englanders refuse to face our own mortality and realize that doing that is not necessarily a good idea. Other stuff going on this week. We'll be hearing from Nvidia, like I mentioned, in terms of their earnings. Home Depot as well. You will also be getting a State of the Union address from the president. That will be expressly and especially interesting given the Supreme Court action from Friday. Let's take a quick break now. When we come back, we're going to revisit the news from 10 a.m. on Friday of last week with the Supreme Court throwing out the majority of President Trump's tariffs that were based on IEEPA and now imposing new tariffs over the weekend. We'll be covering that next here on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Financial life is more connected than ever. You likely have online accounts, digital payments, automatic transfers, and that connectivity can create risks if you aren't careful. Hi, this is Chuck Zada from the Armstrong Advisory Group. Elder financial abuse doesn't always involve a scam call. It often starts with small changes like unfamiliar transactions, new names on certain accounts, or someone quietly taking on more control than they should. One of the most important planning steps isn't about investments at all, it's about clarity. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse, and it covers practical tools like account alerts, trusted contacts, and how to structure powers of attorney. To get your free copy, call us right now at 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com. There are many elements needed to build a successful estate plan, and if you don't know where to start, Cushing & Dolan can help. Estate planning doesn't stop with a will. Wills by themselves do not keep your estate out of probate, which takes time, can be costly, and it makes your estate a matter of public record. Many families use trusts to help protect their assets. Trusts are tools that are designed to help your assets pass privately, more efficiently, and without court involvement. Cushing & Dolan have put together a new guide called Back to the Basics, a complete guide to an estate and asset protection plan. It explains, in clear terms, how wills, trusts, and probate actually work, and why structure matters. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round and not like here, so head to visit usvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all three on the vacation of a lifetime. The USVI is America's Caribbean paradise, and again, not like here. Plan your winter escape now at visitusvi.com. That's visitusvi.com.
So, as everyone has heard at this point, the president's use of IEEPA tariffs on many different nations was overruled by the Supreme Court on Friday morning, or at least the announcement was made on Friday morning, and a lot has occurred since then. I do think it's worth reading one piece from the courts on their opinions, and specifically I'm going to read from Justice Neil Gorsuch's view on this entire case and the tariffs. And I think it's relevant because it speaks directly to executive power, and I think it's relevant for when we talked about, for instance, the Biden's attempt to throw out student loans and several other uses of executive power. So he's quoted saying, and sorry, this is a bit long, but for those who think it is important for the nation to impose more tariffs, I understand that today's decision will be disappointing. All I can offer them is that most major decisions affecting the rights and responsibilities of the American people, including the duty to pay taxes and tariffs, are funneled through the legislative process for a reason. Yes, legislating can be hard and take time. And yes, it can be tempting to bypass Congress when some pressing problem arises. But the deliberative nature of the legislative process was the whole point of its design. Through that process, the nation can tap the combined wisdom of the people's elected representatives, not just that of one faction or man. Their deliberative tempers impulse and compromise hammers disagreements into workable solutions, and because laws must earn such broad support to survive the legislative process, they tend to endure, allowing ordinary people to plan their lives in ways they cannot when the rules shift from day to day. In all, the legislative process helps ensure each of us has a stake in the laws that govern us and the nation's future. For some today, the weight of those virtues is apparent. For others, it may not seem so obvious. But if history is any guide, the tables will turn, and the day will come when those disappointed by today's results will appreciate the legislative process for the bulwark of liberty it is. So, a lot of words there, but I think it goes to the point here that this court, in a 6-3 vote, let's remember that two out of three of Donald Trump's appointees to the Supreme Court ruled to throw out these tariffs. And I think this quote kind of sums up a lot of folks' views on it, which is, yes, I may be in favor of tariffs. I may want this to go forward. I might think it's the best idea in the world. But allowing this type of thing to happen, even if you truly agree with it, paves the path for future presidents to exercise executive power in ways that I don't think most people appreciate. And so I thought that appropriately summed up why this stuff was thrown out. It does not have to do with the merits of tariffs, which we have hotly debated on this own show, and I think most people listening know that we're not in favor of, but really spoke to, hey, there is a process you have to go through to implement those tariffs, and now the White House is, finding themselves on a different path of needing to go down that road. So, Mark, tariffs get thrown out at 10 a.m. on Friday. Pretty much immediately, the president comes out later in the day, announces 10% tariffs under a different rule, Section 122 of, I don't recall which act. And most experts that I have heard have said that there is much more justification for this one. On Saturday, then he bumps it up to 15%. So what you should know about this, the brand new tariffs have been implemented by the White House. They are much more of a blunt force than what was used previously. They also have a time limit on them. From what I understand, they can only be implemented for 150 days. Where should we take this from here, Mark, in terms of thinking about the state of tariffs now in 2026? Are we right back to April of 2025?
Well, now that the question is back where it arguably properly belongs with the legislature, we've sort of settled that legal question. Now we can focus on why tariffs are or are not good, are or are not likely to achieve, say, particular objectives, Mike. So I'll try to stay in my economic lane here and make a couple quick points about tariffs, if that's helpful.
Please.
Okay. So the idea behind tariffs, I think, Mike, is to reduce imports. The
By the way,
problem. Go ahead.
like you point that out. I'm going to say that from the Trump administration's messaging, I am unsure that that has been
True,
the
they've
sole
shifted. I'm giving them the
reason.
benefit here, though.
Yep.
I'm trying to lend some. I am sane washing all the helter skelter. One day I'm putting tariffs on one country because they upset me. The next day I'm giving somebody else a break because they made a big investment in America. I'm trying to make that more coherent and just say they want more. They want American. They want to revive American manufacturing.
Sure.
The problem with tariffs is that they don't do that. They make imports more expensive. Okay, we all accept that. But businesses buy most of the imports. They're inputs to further production. That's why the auto industry hates steel tariffs. That's why the candy making industry, when we used to have one in this country, we don't anymore. Because of sugar tariffs, they put thousands of people out of jobs. So it's important to remember that while politicians often tout the jobs saved by tariffs, nobody pays any attention to the many, many more jobs lost because inputs got more expensive. That's one point about tariffs to keep in mind. The second point, and related to it, is that we actually lost 120,000 manufacturing jobs last year. Now, we lost manufacturing jobs the year before. We lost about 20,000, but that pace increased. And though I haven't seen anybody tease out the effect of tariffs yet, it's hard to argue that some of that is not attributable to precisely the effect of to the effect that I was talking about earlier, the fact that tariffs may save a few jobs, but it's at the expense of many other jobs, not to mention the increased cost of things that we as consumers buy.
Yeah. So, look, I think that there is a very fair point there, which is there is little evidence throughout history that imposing tariffs actually increases American manufacturing capability, competitiveness, and employment. There's no evidence to support that it does. I'll also be willing to say, though, Mark, that we didn't in this case actually get to test out broad-based tariffs on almost everything coming into the United States across those borders, and we rarely have in U.S. history attempted that, in modern U.S. history attempted that either, right? The tariffs that we've seen that have been studied have been on specific industries, and it's pretty clear what has happened in that case. This was different. This was, hey, just about everything is getting a tariff, and it's getting a pretty substantial tariff. So I think uncertain what would have been in the impact, over the next decade had these tariffs stayed in place, but also I think it's irrelevant because they can't stay in place based on how it was done. I now want to kind of turn to a few different groups and think about how things may play out over the course of the next year or so. One would be American businesses, two would be foreign trade partners, and three would be American politicians, because I think they all are going to be facing some interesting challenges over the course of the next few months. Let's start off with American businesses. So I think there's a lot of evidence that unless you were operating in an industry that was responsible for building up AI infrastructure and that specific type of manufacturing, construction, and technology, you've been sitting the last year and kind of scratching your head and just pausing a whole lot of investment plans, right? You think through Ford Motor, you think through lumber yards, home builders. They've all just been kind of sitting back and saying, we don't really know what trade policy is going to look like this year, next year, and so we're not going to make a giant investment in a new American manufacturing plant. We're not going to relocate manufacturing from Canada or Mexico or elsewhere. We're just going to kind of absorb these tariffs, maybe pass a bunch of it on to the consumer for now, but making big investments to change our manufacturing process, not going to happen until we have certainty. That's now just been kicked down the road for another who knows how long, right? Because at this stage, if you were confused about where tariffs were for your business 6 months ago, you absolutely have no idea where they're going to be at this stage. Is that fair to say in your estimation?
Well, I think what happened last Friday, which you've already recounted, is evidence of that. Tariffs started the day on Friday, a blanket tariff at 10%. And then I guess something happened overnight on Friday that upset the president because they went up to 15%. Moreover, this will be in effect for 180 days, at which point Congress has to vote up or down on it.
150, I think.
Oh, 150, excuse me. Thank you. Yeah, geez, I think I would have done my homework on that simple point, but thank you. So we've got 6 months of now vacillation or fluid tariffs, let's say,
Yeah.
because he could change it again tomorrow. It'd be nice if he just stopped doing. If we could impart one bit of advice to the White House, it would be. But then again, everybody feels this way. Stop doing that. Declare a rate, stick with it, and then let's see. Then, like you said, Mike, we can test it.
Right.
We can't because the rules keep changing.
Quick
And
break.
We don't know.
We got to take a
Yes.
quick break. Wall Street Watch coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, what you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in negative territory to begin the week as Wall Street continues to navigate tariff uncertainty amid the Supreme Court overturning President Trump's tariffs on Friday. On Saturday, Trump said he would increase to a 15% global tariff. Traders are also readying for a significant earnings report from AI and chip giant Nvidia, as well as retailer Home Depot this week. Right now, the Dow is selling off 1.3% or 655 points. S&P 500 down about 0.75% or 49 points. Lowered NASDAQ down 0.7% or 163 points. Russell 2000 selling off over 1.5%. 10-year Treasury yield is down 3 basis points at 4.054%, and crude oil up 1% higher today, trading at $67.23 a barrel. Eli Lilly announced a new form of its blockbuster obesity drug Zepbound that offers a month's worth of doses in a single pen. Separately, Novo Nordisk said its obesity treatment failed to beat the weight loss delivered by Eli Lilly's Zepbound in a head-to-head trial. Novo Nordisk shares plunging 15% on that news, while Eli Lilly stock is rising nearly 4%. Another drug maker making headlines today is Merck, after the company announced it's splitting its pharmaceuticals unit to bolster product launches before a crucial patent loss, where one will house its cancer drugs, including its blockbuster Keytruda. Merck stock is mostly flat. Meanwhile, Domino's Pizza posted solid fourth quarter results, where its same-store sales climbed 3.7% and logged a 6.4% increase in fourth quarter revenue. The pizza chain also raised its quarterly dividend by 15%. Shares in Domino's are up by 3%. And several airline stocks, including United, American, and Delta, trading about 4% lower amid the widespread snowstorm impacting the Northeast, resulting in thousands of flight cancellations. I'm Tucker Silva, and that is Wall Street Watch.
Mark, before the break, we were talking about the Supreme Court's striking down the president's tariffs under the International Emergency Economic Powers Act, or IEPA, as it's being referred to. Also on Friday, the president referred to the process for reimbursement of tariffs. Now, it's estimated that anywhere between $134 and $175 billion has been collected under these tariffs. And the president on Friday alluded to, it could end up being in court for the next 5 years to figure out how this goes. And so that is another part of the conversation we were having around how this impacts corporations. So there's going to be this reimbursement process. I think companies are probably very aware of what they have paid in tariffs, although it's probably pretty complicated to determine which ones were under IEPA versus which ones are under other still legal tariffs, such as those on autos and auto parts, steel, etc. But I sure, as an American taxpayer, sure hope it doesn't take 5 years, because the other piece of this that I am almost certain is the case, if the government has collected a bunch of revenue illegally, and the courts have confirmed that that collection was illegal, I think these companies are going to be entitled to interest as well. So this is going to be a long, drawn-out process. I don't think it is going to be immediate. I also don't think it's going to be inflationary, at least measurably inflationary, when the companies do receive that revenue back, because I think it's going to take so long. But gosh, if it takes 5 years, you think about, 7% interest compounded on the money that has to be paid back. That part sure would sting to the deficit, which, you were talking about the reasoning behind the tariffs. That was another reason that these things were introduced, or at least part of the explanation for them was, hey, we're going to use this to reduce deficits. And there, at least, we could measure the impact. The impact on employment in other areas was tougher to measure, but there, at least, we could say, okay, yeah, this is at least doing more to balance the budget than what we had seen previously.
Yeah, tariffs are a bad enough idea for reasons that we talked about, and those reasons are not intuitive. So that's why I keep reciting them. It's not obvious that restricting imports actually restricts exports too, because the two move in tandem. It's not obvious that the trade deficit is a result of us not saving enough. You might wonder, how are those two things related? But in fact, trade deficits and budget deficits, which are a form of saving, move together. I'm just rehashing the economic arguments for a second,
Sure.
Mike. So on top of that, you layer the administration's risky tariff implementation strategy. They could have just gone to Congress a year ago and said, we want tariffs on XYZ goods, or we want you to specifically give the president authority under, i.e. amend IEPA. Is it IEPA?
IEPA.
Is that the
yeah.
Okay. Congress could have amended IEPA to give the president unilateral authority to set tariffs by proclamation and to do his wheeler dealer thing. But he chose not to do that. He chose to barrel ahead with the approach that he pursued. It was legally risky, as evidenced by the lopsided Supreme Court decision. Now he doesn't have his tariff strategy, and we lose the revenue. That's because of the way it was implemented, Mike.
And shame on the advisors who pushed this, right? I mean, like, this was always going to be legally risky, and now it leaves the economy, I think, inarguably worse off than it would have been had a different process was followed. But you brought up, Congress allowing this. The other thing that this is going to do is quite possibly force a vote on tariffs, which are not seemingly terribly popular with the American public, run directly contrary to the beliefs of many in the Republican Party. I know that the Republican Party, looks and stands for different things than it did a decade ago, but generally speaking, many in the Republican Party still believe in the free markets and the power of, low tariffs, fewer barriers to trade. And so I think, quite honestly, lawmakers have been quite happy to not have to vote on this thing and have it on their voting record, and now more likely that they will face that pressure once again to, hey, do I stand up for what my voters seemingly want and what has been a core tenet of the Republican Party for decades, or do I cave to the president's pressure to vote in these new tariff powers that he's probably going to want to have going forward? So big questions there for American lawmakers. The third group that is thrown into a whole bunch of uncertainty now is our foreign trade partners. So several countries have inked formal trade deals with the United States. For example, last week, Japan committed to $36 billion in investments. Indonesia signed an agreement with D.C. Under the threat of these tariffs. Presumably, since those deals are inked, they stay in place. But again, this 15% tariff announcement was on every country in the world. So do I have this trade deal that I signed now and then additional levies that I hadn't planned on because of all this?
Yeah.
Open questions, I don't know. Other countries haven't inked trade deals with the United States. The European Union and India being two of them. Massive trade partners. And they both indicated over the weekend that they were going to take a pause and think through what all of this might mean for those deals.
Yeah, I think stepping back and looking at the potential economic implications, just expect more. And this will happen under the next administration, whatever party controls the White House, I think, because we're in a new era, a slower growth, close to zero-sum era where everybody's fighting with everybody else for their share of a more slowly growing pie. It fosters uncertainty. It increases the volatility of economic growth. We saw last year, economic growth fell by a lot, actually, relative to 2024 and 2023, when it grew at close to 3%. Last year, it grew a lot closer to 2%, 2.2 to be specific. But it was a lot more volatile.
Sure.
One quarter was negative, then two spectacular quarters, maybe as businesses purchased a lot of imports ahead of tariffs, and then we had a flat quarter in Q4. GDP, and again, I would expect this to happen no matter like who's in charge, Mike, more volatile and lower. So these helter-skelter protectionist policies have real implications for growth.
Let's take a quick break. When we come back, let's sum it all up. I want to think through, okay, we've outlined what has happened. We've outlined what we think is likely to happen next. What does it all mean for markets? What does it mean for American companies? Quick break. We're going to talk about that next on the Financial Exchange.
Daily financial content in your feed when you want it. Follow the Financial Exchange on Instagram. This is the Financial Exchange. Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com. Protecting your assets is the most important part of a sound estate plan. Cushing & Dolan's new guide called Back to the Basics, a complete guide to an estate and asset protection plan, can help. Learn how to avoid probate and address your estate tax concerns. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long, only here on the Financial Exchange Radio Network.
All right, Mark, so we've got a pretty decent market sell-off going on right now with the Dow off nearly 700 points, 1.4%. S&P and NASDAQ both down about 0.8% each. And, I don't think there's a whole lot of new news out there other than the new turmoil from the president's tariffs being thrown out and the reaction from the White House since then. So markets were very volatile on Friday. They opened up in the positive after the tariff announcement, then took a hit when the president started speaking before recovering again in the afternoon. And I think what this means to markets for me is that continued uncertainty about tariffs. I find it unlikely that uncertainty is going to be as serious as it was back in April of last year when anything could really happen, because we seem to have some understanding now of what the limitations are when it comes to tariffs, but we're once again back in this mode of needing to cover newly announced trade deals and corporations further putting off that investment. And so we've seen investment drop off in areas like home construction, like manufacturing. We've seen employment in manufacturing decline over the course of 2025. And generally speaking, what's kind of propped up this economy has been artificial intelligence, right? I mean, it's tough to measure that out precisely, but when you look at the spending on data center construction and everything else related to that space, it has helped employment, helped spending, and generally helped this economy continue growing at a pretty decent clip through 2025. The question, I guess the point that I would make is now even more of the burden of that continued growth falls on the shoulders of the AI industry as a whole now, with these tariffs once again being called into uncertainty mode. Anything else to add on just kind of our conclusions about the news from Friday regarding the Supreme Court and then the follow-on new tariffs from the White House?
I mean, other than to say, Mike, that it's like being told your individual tax rate will be varying depending on the whims of, say, the president, or whether or not Congress affirms those whims. Imagine if you had to adjust your withholding, and you have to do that ahead of time, just like a purchasing manager has to put an order in ahead of time, and you don't know what your tax rate is going to be, but you'll be penalized if you get it wrong. And in the case, this analogy isn't perfect, but the penalty in the case of businesses, you might be paying a higher or a lower tariff rate in 47 days now, depending on, because Congress could say, well, we like the idea, but we don't like the rate, so we're going to give the president an 8% tariff, not a 15% tariff. And then the president and Congress are going to negotiate on that. So I'm not sure if there's less, more, or the same amount of uncertainty as there was under the tariff by whim policy that we were living under a week ago.
Yeah, I'm not sure either, but I do know what I would do in those circumstances of not knowing what my personal tax rate is, which would be to reduce my spending. Right? If I don't know how much I'm going to owe in terms of a massive bill in the future, then as a fiscally responsible individual or as the head of a company, what I'm going to do is save up a whole bunch of money in order to deal with the worst possible outcome. And I think that's what a lot of businesses are going to end up doing too.
Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what's to consider as you prepare for the years ahead. To get your copy, call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
If you've listened to the program, then you've likely heard us talking about one other feature of the economy and markets over the last year that has been noteworthy, which is private credit. Companies like Blackstone, Blue Owl Capital, KKR, not exactly household names, but all play in the space of lending money to corporations rather than them going through the bond market. And all of them have been under immense pressure over the last few weeks again, but really over the last year or so as investors question the business model. Blackstone today down 7.5%, having lost nearly 29% over the last 12 months. Blue Owl Capital down 3.5% today. Stocks down 52% over the last 12 months. And KKR down more than 7.5% today, having lost nearly 29% over the last 12 months. So how should an investor look at all of this? Because in one sense, I find it quite concerning. The business model, investors are clearly demanding liquidity from these funds that are designed not to have it. And investors are also punishing the stocks of these companies for their practices. On the other hand, what I keep hearing is, hey, these companies are bad in some way, and the reason why keeps changing, right? A year ago, or not quite a year ago, 6 months ago, it was all about how there was rampant fraud in the private credit space, and we saw a few companies go belly up because of it. Then it was, hey, maybe the underwriting that they've bragged about for the last 12 months, or 12 years, maybe it's not as good as they think it is. This week and last week, it's been all about how, a lot of the loans they made were to tech and software companies that could be made obsolete by the AI boom. And so, on one sense, I think all of those are reasonable arguments to make. In the other, it seems like there's a lot of negativity about the companies, and they keep changing the narrative in order to make it fit the overall story, which is watch out for private credit. Am I misjudging something here? Because whenever I hear a narrative change so rapidly, I start to question the overall narrative.
Yeah, I'm not sure what the overall narrative is here, other than that markets have been frothy, and when that happens, you reach for yield. You give loans. Banks do it too, obviously.
Sure.
You give loans to people who are less creditworthy than people you would have given loans to earlier in the economic cycle. That appears to be what happened. It coincided with an influx of capital into private credit. Institutions have already met their targets. They've been funding private credit for over 20 years. Individuals, high net worth investors, and other advised people have been getting into this market. They don't have the same due diligence, investigative capabilities that sophisticated institutions do. So capital is easier to come by, and that always results in making loans to parties that you wouldn't have made it to when capital was scarcer, Mike. So some of this, I think, is to be expected.
In either case, like we've said before, it's going to take time to determine, hey, how ugly is this stuff? Does it take a while to come to the surface? Where the average person could see it would be in their insurance companies, because those guys hold a lot of this type of investment, and if it sours, then could affect all of us from the insurance perspective. Quick break. Market strongly in negative territory. A lot more to cover in the second hour of the show. We will be right back.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Have you saved enough for retirement? This is Mike Armstrong from the Armstrong Advisory Group. The advisors at our firm have 150 years of combined experience in the financial services sector, and they all work together to help you develop a unique financial plan that offers investment management, financial planning, tax strategies, and retirement planning. It's our goal to help you position your assets and give you peace of mind. Having a solid retirement strategy and investment plan becomes more important as you age, so visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Just click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us develop a plan to help you secure your financial future. Again, that's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a new guide available this month titled Protecting Yourself or a Loved One from Elder Financial Abuse. Mike, when we talk about some of the new schemes that we're seeing that are unfortunately taking advantage of seniors, what are some of the more common ones that have popped up in recent years and months?
Yeah, I think whenever you see new emerging ones popping up, it's because something is getting a lot of attention in the first place. So, for instance, we have seen the emergence of more and more crypto-themed Ponzi schemes or frauds that are trying to convince somebody, for instance, that, hey, invest your money here and you can see massive returns over a short period of time. The person viewing it might have already heard about how certain crypto investments had returned a lot of money over a different period of time and assumed that it is legitimate when in a lot of cases it might not be. The other ones that you see, though, I mean, they run the gamut, but they often try and take advantage of someone's trust in an institution. So that could be trust in your bank. It could be trust in your local government. It could be trust in a financial institution like a custodian where you assume, hey, I've been afforded these protections when working with a major investment custodian or bank, so I'm sure I will be if I sign up for an account here or there. And while this is most common in seniors, it can take place in other places too.
Folks, the guide is titled Protecting Yourself or a Loved One from Elder Financial Abuse. The way to request it is by calling 800-393-4001. You can also request it at armstrongadvisory.com. That number again is 800-393-4001. 4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate planning is about more than just deciding who inherits what. It also shapes how your assets are treated over time. And that's a key point from the estate planning attorneys at Cushing & Dolan. Without a clear plan, an estate can face significant tax exposure, as well as long-term care costs that can put pressure on your savings. Trusts often play an important role in your overall plan because they can help address tax concerns and long-term care planning, while still allowing you to retain control during your lifetime. Cushing & Dolan have put together a guide called Back to the Basics, a complete guide to an estate and asset protection plan. It walks through how these planning pieces fit together and what to consider as you prepare for the years ahead. To get your free copy, call 866-848-5699. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. I've got the winners here, Tucker, for us for snowfall and wind totals. If you would be interested. For those of you who are not listening throughout coastal New England, coastal Northeast is getting absolutely hammered with snow. It looks like Rhode Island is going to be taking the winner for most snowfall totals, but according to the National Weather Service, we've got a few areas with over 2 feet so far. Let's see. Taking a look at the Massachusetts total so far, Swansea is the winner. As of 9:38 a.m., 24 inches total and still coming. So more to see there. Congratulations. But to our listeners down in Rhode Island, you've got them beat. Providence coming in at 24.6 inches, Cranston at 23.5, and Narragansett as of 10 a.m. with 26 inches of snow. West Richmond as well, 26 inches. So unfortunately for our listeners on the Cape, in Wellfleet and Chatham and Hatch Beach, you clocked winds at over 70 miles an hour earlier this morning. So if you still have power, congratulations. I can't imagine it'll be for much longer, but thank you for tuning in. Ooh! Sorry, I missed this one. Nantucket, 83 miles an hour.
Wow. Holy crap.
Can't be good.
No.
I have a neighbor who works in the construction industry, does a lot of work down on Nantucket and the islands. And
Not today.
Well, actually, yes. He sent his brother-in-law along with a whole bunch of other workers on the last ferries out yesterday afternoon with a whole bunch of their supplies so that they could keep going to work in this mess today and tomorrow, because I think the ferries are canceled through Tuesday or Wednesday, if I am not mistaken, to the islands. So
wow.
Good luck to everybody, especially down those without power right now and those with 2 feet of plus of snow. Good luck to everybody. Take it easy. Don't try and dig yourself out right away. It's that wet, heavy stuff that gives folks heart attacks, so be careful. The big news of the day continues to be the Supreme Court's ruling on the president's usage of IEEPA tariffs that were implemented back in April of 2025. Estimates for revenue collected on those between $130 and $175 billion. All of which presumed will need to be returned to businesses and individuals who paid those tariffs. By what process, nobody knows, because the Supreme Court was intentionally absent on what to do about that, so likely headed to lower courts. But in general, I think the conclusion today, after a weekend of thinking through all this, is while investors were initially optimistic about what this might mean, they've been thrown back into uncertainty today as the president started off with 10% universal tariffs, now up to 15% on a different tariff justification that is temporary in nature, can only be in place for 150 days, and then a whole bunch of foreign trading partners calling into question trade deals that had not quite yet been inked, such as those between the European Union and the United States, Canada, Mexico, etc. So I think the conclusion is we will have a lot more to cover and discuss when it comes to trade tariffs and the uncertainty that it poses to the U.S. and world economy in 2026. Unfortunately, the other thing that I think seems more likely now is that lawmakers are going to be pushed into a corner of voting on this stuff, which they have been obviously reluctant to do, as it kind of goes against some of their core principles as conservative Republicans in some cases, or if in Democrats' cases, their core principle of disagreeing with everything the president says. Anything else to add on tariffs, Mark?
No, other than that kind of wildly, no matter what you think about tariffs, you want them implemented in a resolute way and in a way that allows businesses to plan. You may think misguidedly that they can bring manufacturing jobs back, or that they will somehow restore America to the glory days of the 50s and 60s, even though that is also a myth. But no matter where you come down on tariffs, Mike, and as I've already indicated, there are lots of good reasons to think that there are better ways of raising living standards. The uncertainty is the killer here, the whimsical way that they've been implemented, and ultimately the faulty way that they've been implemented. It was a risky strategy that the Supreme Court has said was unconstitutional. Now, I guess we're back to square one, but we have another 35. How many reps are there? Something like that. Players in the mix who have to weigh in on this now in an election year.
Further confusion being thrown in here. The European Parliament's Trade Committee held an emergency meeting on Monday to discuss the latest trade moves and effectively said that all discussions and negotiations were on hold regarding trade policy with the United States for the time being. So they've postponed a vote on the U.S. trade deal that was agreed to in theory, and all of this stuff thrown into question. Furthermore, the president is due to visit China, I believe, in March, and any discussions around trade there, big question mark now on any negotiations that could happen between the United States and China. So all sorts of big questions to be raised here. Beside the uncertainty around trade and the blizzard sweeping the Northeast right now, we will get a bunch of economic data as well as earnings this week. The Case-Shiller Home Price Index for December will be coming out on Tuesday. Consumer confidence will also be reported Tuesday at 10 a.m. We have a bunch of Fed speakers. Thursday we'll be getting initial jobless claims. And then we've got the Producer Price Index coming out on Friday. Yeah, Producer Price Index out on Friday, construction spending. And then the following week we'll obviously be getting the jobs report for the month of February, unless the BLS chooses to delay it for some government shutdown-related reason. We will see. In earnings this week, we had Dominion Energy reporting earnings this morning. Tomorrow, we'll hear from Home Depot and some other irrelevant companies. Wednesday, after the bell, Nvidia will be reporting. TJX reports before the bell on Wednesday. Lowe's reporting as well. Salesforce going after the bell as well. So, again, a bunch of different companies that tell you a lot about different areas of the markets and the economy, but Nvidia here, the biggest one, right? The $4+ trillion behemoth in the AI trade that has driven a lot of the growth, but notably not a lot of it recently. Nvidia stock, as of right now, sitting just shy of $190 per share and has been hovering around that level now for some time. It reached, back in October of last year, it reached $207 per share. And since then has just been kind of bumping around here between $170 and, $190 per share as investors call into question just how much longer can this spending continue? Will Meta, Amazon, Microsoft, Alphabet continue to buy these chips at the same pace they have been? And precisely what does it mean for NVIDIA's overall model? Let's take a quick break. When we come back, playing a little bit of trivia here next on the Financial Exchange. That's right after this.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
As you get closer to retirement, making sound decisions to protect your assets becomes even more important, especially with increasing cases of elder financial abuse. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A Bloomberg report from last September notes that older Americans are losing an estimated $28.3 billion to exploitation. Scam calls and fraud emails are issues to be aware of, but there are other warning signs that may not be easy to spot. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse. In it, we discuss a variety of concerns to watch out for, as well as steps that you can take to stay ahead of potential problems. Call us right now at 800-393-4001 and ask for your free guide today. That's 800-393-4001, or you can request the guide online by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Protecting your assets is the most important part of a sound estate plan. Cushing & Dolan's new guide called Back to the Basics, a complete guide to an estate and asset protection plan, can help. Learn how to avoid probate and address your estate tax concerns. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Winter dates fill up fast. So if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John. 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
we have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
Visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
The Financial Exchange streams live every day on YouTube. Be sure to subscribe to our YouTube page and follow market activity all morning long. Only here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button. Time for trivia here on the Financial Exchange. And yesterday, for some reason, if you missed it, which I'm sure you didn't, the U.S. men's hockey team beat Team Canada in overtime to win their 3rd gold medal and their first gold medal since 1980. So our trivia question today, that's right. So our trivia question today is, who did the U.S. men's hockey team beat in the gold medal game of the 1980 Winter Olympics? Once again, who did the U.S. men's hockey team beat in the gold medal game of the 1980 Winter Olympics? Be the 3rd person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the 3rd correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
By the way, I know this happened on Friday, so it was maybe already talked about, but hats off to the women, too. The women's
that was a hell of a
U.S.
game,
Olympic game also went to overtime with an amazing win for that women's team. So huge overtime wins to both the men's and women's Olympic hockey teams for those hockey fans out there. Marc, you, I believe, talked about this a little bit on Wednesday on the program, and I think it's worth talking about again. So the AI scare trade is healthy for the stock market. First of all, let's talk about the AI scare trade, right? It's taken a bunch of different forms. I think in the 4th quarter of last year, you could argue that more investors were scrutinizing the spend of major tech companies and, hey, how is this going to pay off? More recently, the AI scare trade has been scrutinizing companies that could be affected by what's truly impressive technology on the AI front. Why would you deem that to be healthy for the stock market if it does continue this, big sell-offs of certain sectors of the economy, of certain sectors of the market, could in fact be healthy for the market in some people's opinion?
Well, valuations are very high. Stocks are really expensive relative to earnings. And one way that could get resolved, it's always, by the way, been resolved by falling prices, not rising earnings. These dramatic spikes in PE ratios. And there are lots of different ways to define the E in PE, but I'll just kind of leave it at that. So I kind of took heart from this new theme that's emerging, that investors are becoming more discriminating. They're not just wildly pushing up prices of stocks that claim to be implementing AI or AI adjacent in some way. They're actually demanding kind of proof of concept and proof of profit, the ability that is to monetize these investments. So for example, there are many companies that are down double digits this year, Microsoft among them, I think, at least is the last time I checked, which was last week. Overall, though, stocks are flat. As of today, stocks have not moved on the year, and I don't think they've moved in price terms anyway, not counting dividends and repurchases, since like last October. So markets have been in kind of a holding pattern. So if earnings continue to go, and earnings have grown at a double-digit pace year over year, 4Q to 4Q. If that continued, and that's a bit of a stretch to say that it will, Mike, that's one way that stocks could get cheaper without tanking the whole market.
That is one piece that I find pretty miraculous about this year. And again, we're very early in on the year, but the S&P 500 is basically flat. With today's action, it's down 1/3%. The really big tech-forward sectors of the market I think of as the information technology sector, of course, which represents about 1/3 of the S&P 500, and then the communications services sector, which is another 11%. Why communications? Well, it happens to include companies like Meta as well as Alphabet, I believe, that are included in that communications sector. And so between those two, you have nearly half the market. Those two sectors are down 1.5%. Or sorry, no, that's today. 4% and 1% respectively, and yet the S&P is basically flat for this year. So there's been this big rotation. To your point, though, more often than not, when you have valuations climb to exorbitant levels, the way it gets corrected is not through the earnings improving and therefore that ratio improving. Usually, historically, it's been through a broad market downturn that has brought all stocks, whether they really should be dragged into the story or not, getting whacked. And that's just not what we've seen this year.
Right. One way to think about it, because we threw out a lot of concepts, is suppose your measure of whether how fit you are is just your weight divided by your height. That's not obviously as sophisticated as BMI, but suppose weight divided by height was an accepted standard for how physically fit you are, whether you're overweight. That's the same thing as P divided by E. If your weight was high relative to your height, you wouldn't hope to grow to reduce that ratio. That's not a good strategy. Similarly, maybe some people have tried that. On average, doesn't work. Similarly, for whatever now, the difference with P to E is that E in theory, because I'm picture a ratio here with P on top and E on the bottom.
Sure.
So it's just a quotient, one divided by the other. In theory, E could continue to chug along if the economy continues to expand, and if this rotation is you very accurately described it, I think continues, maybe stocks stay flat and earnings continue to grow. That doesn't sound like an enticing prospect, but from a bubble deflation, assuming you agree that there was a little bit of a bubble in AI related stocks, from a resumption of sort of more reasonable valuation ratios perspective, that's the best possible outcome. It will be like the miraculous disinflation that we experienced a few years ago. This would be a miraculous PE deflation, one that didn't really ding the average stock price, which is what an index represents, but allowed PEs to normalize.
Well, in either case, it has been pretty fascinating to watch this year. Again, NASDAQ Composite struggling this year. The S&P basically flat for the year. Dow Jones Industrial Average now up 1% for the year. So, again, a bit of a reversal from what we've seen for the last few years, and we will see how it continues to play out. The other area that is thinking about artificial intelligence and speaking about it publicly at least is the Federal Reserve. And Bill Dudley, former Fed official, has a piece that I think lines up with your own views, Mark, on productivity, artificial intelligence, and what it means for the Fed. But what does he outline in terms of his own thinking about what AI, and I think he acknowledges that it's truly impressive technology that probably will change the world, but what does it mean for the Fed and interest rates?
Yeah, Dudley's view is just the conventional economist view, which you get right out of textbooks. So I'm not inventing anything or even thinking too hard about it. When I say what Dudley said, and what anybody who's familiar with growth would say, which is, okay, so suppose AI is spectacularly successful. It is revolutionary. It increases productivity. It changes the way we work and live. Should interest rates on average be higher or lower? The answer to that's not really clear. All else equal, they should be higher because AI is going to soak up a lot of investment. it may also induce people to spend more in anticipation of higher future earnings. That would also argue for, on average, higher interest rates. And when I say interest rates, I mean the rate the Fed sets, the very short-term rate that the Federal Reserve, that is, can control. So proponents of reducing rates because of the AI story are making an economically incoherent argument, Mike.
Yeah, Dudley points out, like, okay, yeah, if AI just gets rolled out and it manages to augment existing workers and machines and make us all more productive, great. But historically, that's not really been how new technology works. It more likely renders a whole bunch of people's skills obsolete. It could force companies to pay more for the remaining workers who actually have the skills. And historically, at least, it's led to companies spending a whole bunch of money on that technological innovation in order to stay relevant and effective, which, again, historically has required higher real interest rates due to that additional spending on the part of consumers, businesses, and everybody else, which, hypothetically drives inflation a little bit higher. We've got to take a quick break. We're going to have a full market recap with you just after this. Market's in sell-off mode as we close in on the noon hour.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Winter dates fill up fast. So if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches in crystal clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Life changes quickly as we age. Technology is moving faster and is creating new risks for families they didn't have to worry about before. One of the biggest is elder financial abuse. Hi, this is Mike from the Armstrong Advisory Group. I'm not talking just about scams, but situations where more online accounts, digital payments, and shared access can slowly open the door to problems. Today, financial exploitation doesn't always look obvious. It can show up through unfamiliar transactions, misused powers of attorney, or pressure from people who already have a role in someone's life. That's why the Armstrong Advisory Group put together a new guide called Protecting Yourself or a Loved One from Elder Financial Abuse. To get your free copy, call 800-393-4001. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Todd Lutzke from the law firm of Cushing & Dolan with your financial exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in sell-off mode to begin the week as Wall Street continues to navigate tariff confusion amid the Supreme Court overturning Trump's tariffs on Friday. Saturday, President Trump said he would increase to a 15% global tariff. Traders also waiting for significant earnings from AI and chip giant Nvidia, as well as retailer Home Depot and Lowe's and others. Right now, the Dow is down 1.4% or 690 points lower. S&P 500 down nearly 1% or 66 points. NASDAQ selling off 1.1% or 253 points. Russell 2000 down over 2% now. 10-year Treasury yield down 5 basis points at 4.035%, and crude oil up 0.8%, trading just above $67 a barrel. Eli Lilly announced a new form of its blockbuster obesity drug Zepbound that offers a month's worth of doses in a single pen. Separately, Novo Nordisk said its obesity treatment failed to beat the weight loss delivered by Eli Lilly's Zepbound in a head-to-head trial. Shares in Novo Nordisk plunging over 15%, while Eli Lilly stock is up about 4%. Another drug maker making headlines is Marc, after the company announced it's splitting its pharmaceuticals unit to bolster product launches before a crucial patent loss, where one will house its cancer drugs, including blockbuster Keytruda. Merck stock is up by 1%. Meanwhile, Domino's Pizza posted solid fourth quarter results where its same-store sales climbed 3.7% and logged a 6.4% increase in revenue. The pizza chain also raised its quarterly dividend by 15%. Domino's is now up by over 2%. And several airline stocks are seeing losses on the day, including United, American, and Delta, all trading about 4% lower amid the widespread snowstorm impacting the Northeast, resulting in thousands of flight cancellations. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: who did the U.S. men's hockey team beat in the gold medal game of the 1980 Winter Olympics? It would be Finland, 2 days after they beat the Soviet Union. So, again, it was Finland. Mike from West Harwich, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Mike. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mark, in 2025, there were 997 actively managed ETFs launched into markets. the ETFs are taking a very different path than I think the industry was started on. And this might surprise you, but when speaking to the general public about ETFs as like an investment tool, there's almost no real understanding of the differences between ETFs and mutual funds, why you might consider one versus another, and what this expansion has really led to. Let's start, though, with the launching of these new ETFs, because the industry itself was built on the I don't know who actually started the first exchange-traded fund. It's probably not one of the majors, but it was decades ago, and Vanguard was the one that comes to mind for me, at least, in terms of really taking advantage of it, but I don't think they were first to market. But it did drive down costs, and effectively the first products that were launched in the space were these passively managed algorithms that built you a basket of stocks for a fraction of what it cost from their actively managed mutual fund counterparts. Do you have anything else to summarize, I guess, in that development of that industry?
To my knowledge, it was State Street. They introduced the so-called Spider in 1993, which is just an S&P 500 index. So it tracks that index of leading U.S. companies. There were plenty of mutual funds at the time that did it. What made ETFs, which are just a wrapper, they're like mutual funds, but they're wrapped differently. So that allows them to trade throughout the day. And there are some tax advantages relative to mutual funds of the ETF vehicle. But to my knowledge, it was State Street Bank and Trust. It was their subsidiary, SSGA, State Street Global Advisors, that pioneered this idea in 1993. And since then, of course, there's been this proliferation from diversified low-cost index vehicles to these really niche-y, solely speculative in terms of how they're meant to be used vehicles that the Wall Street Journal catalogs in today's article.
Right, and that was the name of the game for quite a few decades, Mark, was just, hey, which giant fund provider can undercut the other one by offering an S&P tracked index fund for a lower cost? We've basically gotten as close to zero as you can get, or in the case of Fidelity, I don't think they do this on the ETF side, but I believe they actually have mutual funds that literally have zero cost attached to them that track major indices. Yeah. To your point, in 2025, in the last couple of years, the industry has been designed by more of these much more speculative type things. So, for instance, you have ETFs that now track cryptocurrencies. You have ETFs that now track single commodities or individual companies, and that add leverage to them. So they attempt to, double or triple the daily return of these commodities or individual companies. We have all sorts of new ETFs that are designed to buffer the volatility of the markets or take volatility out of certain markets. And to me, the launch of these new products over the last couple of years, one, there's only one real reason you do it, which is to make money. And I think the companies see a clear path where, hey, the term ETF, when I ask the average person, hey, do you understand the difference between an ETF and a mutual fund? The general answer is no, but when I think of ETF, I think of a cheaper alternative to mutual funds. And in the case of the ones that were launched over the last few years, it's not been the case, right? The whole point of these ones has been, hey, these are pretty expensive strategies. They're oftentimes actively managed and seek to do very different things than what the industry was built on.
Yeah. You could think of it like, no,
please.
Think of it like cereal. When it started out, you could have Special K, cornflakes, and Rice Krispies. They were all basically the same thing. And they satisfied most of your needs, which a diversified index fund does. Most people just need broad market exposure as cheaply as possible. That's a great retirement strategy. Dollar cost average into that sucker for a few decades, and you'll harvest market returns. ETFs were introduced to meet the need for tax-efficient implementation of that type of dollar cost averaging. But to your point, investment managers are in the business of offering products that they think people will buy, and as speculative appetites got more sort of sophisticated, they started offering more things in this very convenient and now familiar wrapper.
In any case, I think what's clear to me is that while these things that have been launched over the last few years, have their place, and some of them are more applicable, I think, to most people than others. Others just look like pure speculative tools to me that are probably a waste of money for the average investor. But it is confusing. The other thing I'll say is, the title of the Wall Street Journal article is The Exotic Makeover of the Once Boring ETF Market. And I would just ask myself, like, as a 65-year-old retiree, am I looking for an exotic makeover? I don't think most of us.
Again, like with my cereal analogy, most of what you see in the hundreds of choices in the supermarket shelf is not relevant to you. It's niche-y.
And I think deciphering between all of that is more challenging than ever, and especially with some of these products that are specifically marketed towards and geared towards retirees. It does become challenging to differentiate. If you are invested in some of these newer products today, if you are looking at some of these strategies and saying, hey, might that benefit my portfolio, my goals for investing? I've got this cash on the sideline and I've been hesitant to move into markets, but this suddenly appeals to me. One, I would ask you to slow down, make sure you understand what you're investing in. If you need some assistance in figuring out what that all means and how it might affect your retirement, give the folks at Armstrong Advisory Group a call. The number is 800-393-4001. We offer free consultations where we can dive through and educate you on how these different products can be used to successfully supplement what you already have. The number again is 800-393-4001. You can also book a time for us to call you back at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In the encouraging news category, according to a new report released by Gusto, just on Saturday, there are now 21.2 million employees at firms with between 2 and 99 workers who have access to a 401k or 401k style account. That's up from 15.6 million back in 2019. In contrast, bigger firms with over 500 workers, 90% of them have a retirement plan. My only question there is, who on earth are these 10% that work for companies with more than 500 employees and don't have access to a 401k or similar type of plan? When it comes to these, by the way, I think most people use them correctly, but it just always sticks with me. I had a family member who's now passed away who was very suspicious of their 401k, and it was mainly because they didn't really like or trust the company that they worked for, which unfortunately plenty of people find themselves in that position. And I think that I tried to explain to him why that is probably a mistake and how these things actually work, how they're different from pension plans, for example, where the financial success of that company and the trust you need in them is pretty required. But if you are finding yourself in that position, definitely do your research, because by and large, with very few exceptions, I see the introductions of these types of retirement plans as really beneficial to most employees. And I kept looking for the other shoe to drop on this story, and there really wasn't one. It is, to my mind, very good news that more and more Americans now have the ability to save into these 401k plans. Whether or not they have the capability financially is a different question, but really, in my mind, very few downsides to the furthering of that 401k option. We've got to take a quick break. When we come back, Stack Roulette is next on the Financial Exchange.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. Protecting your assets is the most important part of a sound estate plan. Cushing & Dolan's new guide called Back to the Basics, a complete guide to an estate and asset protection plan, can help. Learn how to avoid probate and address your estate tax concerns. Get yours today by calling 866-848-5699. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Winter dates fill up fast, so if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S. Virgin Islands, America's Caribbean paradise. Here, you can fall naturally in rhythm with the heartbeat of the islands. Spend your days on powder-soft beaches, in crystal-clear water, sailing, snorkeling, or simply relaxing under the sun. Your evenings will be just as memorable, with world-class dining, local cuisine, live music, and unforgettable sunsets. Explore St. Croix, St. Thomas, or St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset this winter. Flights from New England could not be easier. There's no passport required, and there's no money to exchange. Start planning your trip today, because winter getaways don't last forever. Head to visitusvi.com for details and for more information, and get set to jet on your dream vacation. Discover why the U.S. Virgin Islands are America's Caribbean paradise. Book your trip today at visitusvi.com. That's visitusvi.com.
Financial life is more connected than ever. You likely have online accounts, digital payments, automatic transfers, and that connectivity can create risks if you aren't careful. Hi, this is Chuck Zada from the Armstrong Advisory Group. Elder financial abuse doesn't always involve a scam call. It often starts with small changes like unfamiliar transactions, new names on certain accounts, or someone quietly taking on more control than they should. One of the most important planning steps isn't about investments at all, it's about clarity. Our new guide is called Protecting Yourself or a Loved One from Elder Financial Abuse, and it covers practical tools like account alerts, trusted contacts, and how to structure powers of attorney. To get your free copy, call us right now at 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined. For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Follow the Financial Exchange Show on Instagram and see what's driving the conversation about Wall Street and economic trends. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
It's time for a bit of Stack Roulette, and it has been a while on the show since we've had the opportunity to rant about one of our just timeless rants that we go to. So I'm actually going to turn the mic over to Tucker to share about his experience over the weekend at, I believe, the Boston Garden. Is that right?
Yeah, TD Garden took the kiddos to Disney on Ice. A+, great show. But we were on the suite level, and there was this new provisions market.
Okay.
Where you get your snacks. They have like a wine dispenser, a whiskey dispenser, a beer, and like anything.
But
anything
all self-serve.
There. All self-serve.
Okay.
Right? I mean, they get a couple workers hovering around, making sure you're not being a complete dope, checking out. But the checkout process is pretty much, there's like 4 or 5 different areas or kiosks, if you will, where you set all your items on this tray-looking thing.
Yeah.
And there's like a scanner overhead. And as you're putting it down, your items down, you see on the screen is just like, oh, here's some potato chips, here's a bottle of water, here's a slice of pizza, et cetera, and it's dead on accurate.
Sure.
It's very impressive technology. Go to check out. What's the first thing you see? Do you want to tip 10%, 20%, or 25%? I'm like, who the hell am I tipping?
There's not a human in sight.
No. I mean, again, there was a couple workers just like hanging out, just making sure you're, not stealing stuff and making sure you know how to cash out. But first thing I see is tip. What?
The only thing that comes to mind is they probably are required to open the beer can if you got one. That's always the case at some of these
they don't even open it.
venues.
They tell you to open it.
Yeah.
They say, hey, open your beer can.
Open your beer can.
Yeah.
We all have to resist this. I know that you can get into the habit of just being like, oh, yeah, 10%. No. If they are not going to actually do anything to help you, then we cannot be in the habit of tipping these machines and just like, who does the tip even go to in this case?
I could not tell you. The tray that I put it on?
I'm fairly certain that Massachusetts law requires the company to pay the tip out to an individual. I don't think
I'm sure
that the garden's allowed to hold on to it, but in either case, it's absolutely
I'm sure it's
preposterous.
pooled or whatever amongst all the TD workers.
The other one that always gets me is whenever I go to one of these breweries and I order a bunch of takeaway beer.
Right.
And literally they just have it in a case, like waiting for it to happen. All they did was,
get it from the fridge.
Turn around, put it in the case for me, and the first thing that comes up, it's not, do you want to tip $1, $5, or $7, which I would honestly might be willing to do. It's, do you want to tip 15, 20, or 25%? And I just lose my mind at the audacity of these companies to request my tip on a transaction like that.
I don't get it.
Resist. Don't allow it to happen. Mark, what do you have for us for Stack Roulette?
Mike, not a lot going on today because of the paralyzing storm. So I thought I'd mention with respect to 401ks, who sponsors your plan, the employer associated with it, doesn't really have any bearing on the way the plan is run. The employer has to pick a provider. The assets stay separate. The administration usually stays separate from your employer. Your money's kept in a trust. Has nothing to do with your employer. They couldn't access it if they wanted to. It's separate from their from their company holdings.
Importantly, if that company goes belly up, they go completely bankrupt, what happens to that 401k?
It's in a trust. The assets are separate from company assets, so your money will remain invested in whatever you chose. That's different than a pension, where your benefits could be imperiled because benefits continue to accrue and the company's got to fund those. But 401k accounts, they're more like IRAs that are offered to a group. That's not the best analogy, but it is kept in a trust, totally separate from your employer.
And by the way, it's oftentimes introduced by the company in large part because the executives at that company want a tool to be able to save money on taxes. And so I talked about this earlier during the last segment, but when you have one of those plans, I'm not saying that everybody should save into it. I'm not saying that it's the best thing for you in particular. I'm not saying you should do the traditional versus the Roth. Those are all complicated discussions, but it should be treated differently than, say, suspicions about your employer's ability to pay the next paycheck or fund that pension liability or any of those different factors because of the way it's set up. And it is one of those distinct, there are many disadvantages to a 401k compared to a pension plan, but this is one of the distinct advantages is you're not reliant upon that company's surviving the next 30 years in order to ensure that that money in your plan is actually accessible for you. Markets remain open and pretty strongly in negative territory here as we kick off the last week of February in trading. The Dow Jones Industrial Average now leading the way down 730 points, about 1.5%. S&P 500 down 71 points or 1%. NASDAQ down 264 points, 1.15%. And the Russell 2000, those smaller names, down 53 points or 2% in early trading. We've got a lot more to cover this week as we continue to digest the Supreme Court's overruling of tariffs. We'll be back at it tomorrow. Stay safe, everybody, and we'll see you then.
Winter dates fill up fast. So if you're thinking about escaping the cold, now's the time to plan a getaway to the U.S.